Once again, you pulled numbers for us. This time it's for March. Let's run through it. It looks like all good news. So it looks like as we were expecting so far, but let's get details in for the people.
Yeah, spring is here. So that's all very exciting and it's showing up in the numbers. So you can see that the bounce continued from what we had seen in February up from January's total homes sold. A little over 1,800 in March, and that's up almost 30% month over month. It's still down about 3% year over year, but not a huge change year over year. And you can see that with the current inventory, we're back under 2 months of supply, and actually we're approaching 1 month of supply given the amount of activity and the homes that are available, which I think you made the point the other day. This is still, even though this is maybe more homes on the market, this is nothing compared to what is quote unquote normal, right? We're still in a supply constrained market compared to where things have been in the past many years.
Yeah. Big sellers market, and it's all supply driven. We have no supply. People are sitting on their lower interest rates. I get that. Builders are struggling to build in time. Even if they do, those are expensive homes and they're not that close. That's where you can get land. So that's always a limitation, but that's a great option if you don't want to compete with a bunch of people. If you want warranties on all of your items and you want to be able to do inspections, new builds are a good way to go. Those aren't part of our numbers typically, so keep that in mind. If builder supply bumps up dramatically, I don't know that we see that necessarily in our MLS system. So we will hear about that though from pretty much every news source in town. We'll make a note if builders start going crazy on their sales numbers. But this is encouraging. Looks like the drop was seasonal. It was more than expected, but still a seasonal drop. We're going back up, and then the average sale price to average list price, one of our best metrics, looks like that's getting ready to touch again. That's good news for sellers. Yep.
Yeah, no, that is great news. Those lines converging always tells us something interesting about the amount of competition or the limited supply that's on the market. And you can see that again after the winter kind of freeze over, things are bouncing back. Those lines are very close now. It was a big leap month over month. The average sold price is up over $15,000, so that's up 4% just in a month. And then year over year, we're up 3%. So you saw that volume was down 3% year over year, price is up, right? So again, that's one of those things that we've talked about where kind of have the seasonality of the up and down in terms of the activity in the market. But the thing that's been consistent is the sales price never quite goes as low as it was the previous year. And so that continues to be on an upward trajectory. If you look at this March compared to 24, compared to 2023, that trend continues.
Yeah, and it's going to continue indefinitely. I think that's something that we can all agree on. Over time, our grandparents' houses were cheaper than houses are now. That's always going to be the case. Our grandkids will be saying the same thing. So this is one of those where even though there's some uncertainty economically through whatever markets, one thing you got to keep in mind is the last recession we saw was housing based. Okay, that was 2008. That was a big worldwide effect because of housing. All of us today would still buy those houses at 2006 prices, knowing that that recession was going to happen. They're just cheaper. We're going to be more expensive 4 or 5 years from now. This chart confirms that we just keep ticking up. We have our seasonal changes, but these houses just keep getting more expensive. And as long as we're supply restrained, they're just going to keep going up faster. So another indicator of that is our little donut chart here. Danny runs these numbers 5% more or 5% less than asking, which is a bigger margin than typical. And we're starting to see them creep into the above asking more frequently, right?
Yeah, exactly. And that orange section, which is 5% or more below asking, that has shrunk over the last couple of months after growing for a number of months. So it's just another indicator of a reversal of that trend. There's more activity. When that happens, there's more interest for the limited supply. Things tend to go at or above asking, and that's reflected here as well.
Yep. And then average days in the market, again, this is a seasonal number typically. Again, it's showing higher than we were last year at this time. But it will be going down 37 days on the market on average. The median's a better indicator, 12 days on the market median. If that is a house that's ready to go, expect it to sell within the first 2 weeks. That goes along with the other the next number, price reductions.
Yeah, this is one where again you can see we rolled this back more than just the past year, so you can see the seasonality of it all. Again, things slow down, which means in order to get attention or interest with a given home, more often than not, there is a price reduction just to get some activity and get people engaged. And you can see that that lessens when you get into these busy periods of later spring into the summer. And then it just creeps back up as you go throughout the year. So we're over the peak now. That was back in December. 42% of homes back then sold after a price reduction. The last 2 months now have dropped down to 32%. So a precipitous fall off there. And we'd expect that that just continues to fall as we get more and more interest, more and more buyers out there as things heat up.
Yeah, and another thing that we like to watch on this, because we've been tracking these numbers for so long, we can see when the peak months are to sell. So right now it looks like May. Where's that? Yeah, that's May. April, May, June are the lowest times for price reductions, meaning that the least amount of houses had to adjust their price to the lower. And we're going to expect that again this year. I don't know if we'll get this low. I think that we had a little shift in the market this year to last year, but we can expect that the timing of these numbers are going to trend the same.
Yep. And then, of course, right onto the mortgage rates. I mean, this is as you said, supply constraints aside, this continues to be one of the major drivers of just what's going on in our market. Obviously, not just in Central Ohio market, but nationally. Things are down slightly from where they were last year, but I don't know that anybody's expecting a big change anytime immediately. We saw a little bit lower rate at some point last year, but this is kind of where things have been for quite some time now. We're going on 2 years of this?
Mm-hmm. I think everyone needs to think about this as the new normal. Honestly, when we were down in the 2 and 3%, the Fed funds rate was at 0%. That's not a tenable rate. That's not something that any bank should be lending on. Fed funds is the government bank, basically. So it doesn't make sense that they would go back to 0 again unless there's some kind of economic catastrophe. 6%, I think, is going to be the lowest we see in a while. We have not seen that yet, by the way. I think we got real close last week for a while there. This is new normal. Between 6 and 7, expect to see the rates there and then plan and budget accordingly. And as always, Danny pulls all the numbers here. This is not the typical number set that we get. Danny pulls them himself every month. And this is a little map of our zip codes. Looks like Grove City, that's 43123, was the hot market this month. Grove City, I can say, has pretty close proximity to downtown and Columbus's great amenities, and it is a little bit more affordable than some of the others. So I can see why that's going. Even though it's a smaller land mass, I can see why that would be a hot district. We're going to see that on the news eventually. If you're following housing trend news, when you see the hot markets in Danny's chart, they're going to make the headlines later on. We'll continue to track. As always, thanks, Danny, for doing this, and we'll see you next month.